following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 30th day of October. Just 2 sessions to go, and then we wrap up this candle right here, that monthly candle. And we've seen other times where the last 2 days of the month, it's usually June, at least in memory, my memory serves me correctly, that you get real weakness, and then just the last 2 days, the candle goes from being really negative to pretty darn good, sometimes to an all-time high. Not this case. There's no way on earth that we can go to 26,952 for a new all-time high, above 1 point above the 26,951 in 1.5 days. There's just no way on earth that that can happen. So now let's go to the nitty-gritties. Within the context of the market, within the chart formations, and this is what I'll be talking about tonight in my webinar. Webinar at 5 o'clock to 6:30 for subscribers. You can sign up right away. You'll start getting my newsletter. You'll get a money back guarantee. So if you sign up for the letter, you'll be able to be there for this webinar. You'll be able to review it. It's archived. You'll be able to see it as many times as you want. Most importantly, I'm trying to set the stage, as I always do in these webinars, for the coming few months. Remember, the last one I did is what kind of a top shoot will we be getting, and how long will it last? When will the next part of this the mega bull market resume? This is part of what I call the coda phase, CODA. This is the end phase. But an end phase, if you know Beethoven's music, an end phase can last a long time. That coda can go on, and every time you think it's completed, he just changes the key for a little while and moves into another piece of the same theme, another form, and goes on until he finally goes, bum, bum, and then it's all over. 5-1. Okay, let's get to the nitty-gritties. The Dow's up 239 after a 900-point kind of a trek to the upside and a slump to the downside yesterday, closing just a little above halfway. So today we're filling in the gap, trying to do what we started out doing yesterday without the gap up. This is kind of important for me. This is now for the very first time. Yesterday, Friday, we started to see this candle, 3 candles away. You see that vertical bar? It's not a candle, it's a bar. In the histogram of the MACD, the moving average convergence divergence, well, it was starting to improve. It looked like with the gap up yesterday, if that held, that it would be very good action, and that you'd have another decreasing histogram. In other words, this green line started getting closer and closer to the red line. Today's the first time that it's really happening in force. So this is going to be so important, because the stochastic at 15% is trying to form some kind of at least a tradable bottom, a short-term bottom, and the unbalanced volume has just made a V-shaped turnaround. We'll see how this goes. Most importantly, look at the weekly chart. Look at the way you've got this cup formation. It's really a rectangle with a cup formation within it that has failed at the all-time high. It went from 26,616 January the 26th to 26,000. I'm taking my time today. We're not going to rush through all the indices. I'm building up to my webinar tonight. Going to start to explain to you what, why, and how we're going to go through this tonight for subscribers, how we're going to start implementing new positions, trying to keep our core positions from the short that was right there, just about the exact top of the market, of the Dow, that is. The 3rd of October was 26,951. Before the open, we got short, and we've stayed short. We've taken some profits, but we're trying to stay short because I don't see any bounce occurring before testing the 23,300s of significance that could make me change my mind about this big consolidation that is really needed. Okay, let's get on with the story. So as I'm looking at it now, the Dow, the 9-period moving average and the 14-period moving average are quite a distance away. The 200 period and the 9 are around about the 24,009. Let's call it 24,900 to 25,000. That's going to be key, because if the Dow at any point can rally above that for 3 out of 5 sessions, in other words, a whole week, if there's a test and it breaks above it and then just does not go back under 24,900, we've got ourselves a really good rally. Can that occur before the midterms a week from today? That's going to be really tough to do. Then you've got China, you've got a lot, you've got Brexit, you've got a lot of things going on. You've got political conflagrations, all sorts of things, and you've got earnings. So Facebook is going to be important. Does that set the stage for at least a mini bounce to the upside in the overbought FANG type stocks? All right, we'll talk about that. Meantime, I gave you the parameters. The S&P had a 103-point rally, a move up and down yesterday. That is incredible. Went right almost to the 9-period moving average. Do you know that it's only touched the 9-period moving average, hasn't crossed above it, but touched it a couple of times since it really broke down at the beginning of October, around about the 8th? I mean, that is really poor action. And look at the weekly. It took out the uptrend line. It is now in the Chapman Wave inside track. It should be a propellant, not a repellent zone. I don't know that my moving averages have crossed negative. The weekly chart is leading me with MACD and stochastic very poor, straight into the monthly chart. Look at that red candle. Can there be a 300 or 400 or 500-point rally tomorrow to at least get to the 2745 level in the S&P? I just don't think that's the case. In the S&P, it would be 2745. Oh man, it would be about a 60 to 70 point rally. You know, this is going to happen. I just don't think so. All right, so those are the parameters for the S&P. 2700, really important to try to reach over the next few days. Better hold 26, I'd say 2642. All right, we're going to go to the QQQs, which is the NDX 100. Look at that candle in the monthly. Also sitting now on the 14-period exponential moving average, the black line in the monthly. MACD's turned down, hasn't crossed negative. It is just fractionally positive. Stochastic still holding real well at 88%. But look at the weekly chart, MACD and stochastic, and the monthly chart is, and the daily chart is still really negative, trying desperately to try to find traction to the upside at 164.59 up $1.37. Let's go to the IWM. We'll finish this section with the IWM. IWM is up 2.46 at 149.17, kind of making this is like a spring-loaded consolidation, a coil spring that says, oh, if everything comes right, because the MACD is actually starting to turn up, it hasn't crossed positive, stochastic's much better. If it can get to the 152.40 area by Tuesday of next week, let's call it Wednesday, if it can break into the 153s, IWM, which led us down, could actually start to lead us somewhat to the upside. Doesn't have to lead us to all-time highs, but just at least for a pretty decent bounce. But look at that ugly candle. Second red candle in the monthly. That is I'm almost close by tomorrow afternoon. I'm pretty sure I'm going to give a sell signal in the monthly chart. The first index that gets a sell signal in a monthly chart in years. I'll be back. Basil Chapman, Tiger Traditions Hour. Dow's up 180, S&P's up 17. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Just real quickly, I know a lot of people ask me about this. So the E-minis that we're looking at right now, 2-minute, 5-minute, 10-minute, remember that I treated like a 120-minute chart, a daily chart and a weekly chart. Doesn't make any difference. They're just time frames that we're using, larger time frames. The 2656 level is the 200-period moving average in the 2-minute chart. The technicals are a little bit negative here. If it closes on any 2-minute bar for 3 bars under 2650 in the next hour, I would say that pretty much we're going to be at a standstill. I said to subscribers this morning, expect a much narrower trade, even though it's 250 points, 300, a much narrower trading range right now, and it could even get smaller. This is almost like when you're waiting for the Fed at 2 o'clock. 2 o'clock Eastern time on a Wednesday, you can see the market, whatever, if it's down sharply or up sharply, as it gets closer to the announcement, it just shrinks and goes as close to unchanged as possible. I think that's what's going to happen as we go into early next week, no matter how we go intra-week. But if the S&P E-mini goes to 2676 at any point today and then holds that for one 10-minute bar, that's going to say we close more at the high end of the day than the low end. My figure right now is that we probably will close like a plus 130 or something like that. I'm just guessing on the Dow. Okay, let's get back to the nitty-gritties. Now, tonight, what I'm going to talk about is I'm going to talk about how the moving averages have really helped us in our analysis, certainly helped me. Hopefully help my subscribers. I get emails all the time from people saying how we use it and where the things are. I know that I got an email recently which said at peak D or trough D, but mostly peak D, because I say other things can happen. What's the real story? I have to say that it's kind of complicated. Perhaps I'll try to set up a webinar just to go through the basics of the Chapman Wave sometime soon. Together with my CD, but the CD is really what can help you. CD introducing the Chapman Wave methodology. It just goes through this so carefully, but just remember at the 4th highest peak, other things can happen. How it recycles to the upside, I'll talk about it a little bit tonight because it was asked by a subscriber, so I will do it as a subscriber question, and I'll try to deal with it briefly. But it takes a little time to practice and to understand that it's at D that you need to make some decisions. It's where you can take something off. It's where you can say, oh, I'm going to take a little bit off, put a stop here. But if it goes over the peak D, I might add, or I'm going to watch it closely because other things can happen. All right. So I'll talk about it in that regard. Now, the IWM has been very important because that monthly chart has just been in a leg B. It's maybe a trough B if there's no new low by tomorrow for this week. But it's just straight down from 170, I mean, to 16, 17%. That's a big move down. 22% in some of the indices, like the SMHs, 11 to 12% in the Dow and the S&P. These are big numbers in a short space of time, but it's not the end of the road as far as I can see. Okay, let's go back now. We're going to go talk about gold. Gold, as I said, was down just a little bit. It was down much more earlier. It's down 2.4. The MACD is just about turned down in the daily, but it hasn't. Stochastic has gone under 80%, and so is the on-balance volume turned down with a relative strength. But price, even if it pulls back to 1210, it's still holding pretty darn well considering what the dollar has done. At the same time, it hasn't broken out on the upside, and gold hasn't broken down. I think it's stuck like bonds in some kind of a trading band for now, maybe between 1250 and 1200 and 1250 and 1208, let's just say, just at least for this period. So nothing to see there at this particular point. Silver, same thing. Silver's kind of stuck. Silver's up 8 cents, 0.008 at 40.45. It's not quite as bullish a pattern as gold. Has made a peak in the daily, and the weekly is starting to overlap, kind of roll over. Not that good. High-grade copper right now, high-grade copper is down, I believe. Yep, down from the peak C1, C2 double top. And this is saying to me that that arch formation that I spoke about in the weekly chart goes together with the stocks, my cash index, Cintas, Amazon, SPY, and Home Depot. They're all in the same category. It's kind of almost like we've commoditized a whole bunch of areas in the market, and commodities are part of that. Let's just look at this TRCCI. TRCCI, haven't looked at it for so long, I've almost forgot the name. TRCCI is the Thomson Reuters Commodity Equal Weighted Index. That's gone to a C and it's gone to a D right there. Little doji candle. I will talk some about candles tonight. It's going to be like a lesson, a very comprehensive look at the markets as well as looking at as an educational experience. So here we go. Commodities. I just don't see anything there right now. I think there's going to be something in commodities next year. I think we're going to have to wait a little bit longer. So this is down 3 at 410. It's in the lower range. Yeah, in the low range. Now I want to get to the TLT. The TLT is going to be important. We're going to talk about that tonight in terms of chart formations, bonds, etc. And look at this, the TLT, 114.26, down 47. I drew the rectangle and I said rectangles, formations can last a lot longer than your patience. And that's exactly what we're looking at. So as far as I can see, regarding the bonds, I think next week, Wednesday or Thursday, we're going to see things fly, either the market or the gold or the dollar. This is next week, a week from tomorrow, after the midterm election results. The market is going to assess things and put it into perspective. And as long as, I think as long as the Senate stays Republican, I think that the market is going to handle it, not with a plum, but at least a fig, maybe, instead of a plum. So, okay, we're looking at the TLT. We're finished with that. Crude oil, just real quickly, crude oil is, it was down. Yep, it's still down. This is really poor. 76.90 was the high that was made in early October. A peak G, unusual peak G in the Chapman wave methodology. Peak F. Now I'm putting a peak F. I'm saying this is peak F as far as I'm concerned in the weekly chart, leg E in the monthly chart. It's really confirmed if crude oil drops below 64.30, let's call it $64 next week, then I'll say, yep, that has to be a peak F. If there's a huge rally, yeah, you can have an isolated G, but I think that crude oil is done for now. All right, now let's get to our story. Questions that I was asked about. I'm going to go to the very first one. I got a question about Sienna. Sienna Core, this is Network Solutions, optical switching, made a peak E, but has held extremely well when you consider some of the other high-tech stocks. tech stock, I don't know about high-tech tech stocks, makes that high back at 30, just over 32, 32, 33 in August, and is pulled back. It has dropped to the 28s, and the 28s is really a level that I'm going to consider. Look at this up channel, and look at the Chapman wave repellent zone right there. It gets repelled at the 32 level. It pulls back. That means that it needs to break. It can't just go to 31.75. It needs to go into the 32s. And for Sienna, in this particular phase of the market, to show leadership, it has the potential, but it hasn't done it yet. It needs to go to 32.70. Preferably, it needs to go to 33 within 2 weeks without closing under 27, 26, because the 28 is really important support. I'll be back straight after these messages. Basil Chapman, Dow's up 211, S&P's up 21. I'll be right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I together with Sienna, I was also asked in the den about GWPH. This is a stock that I recommend to subscribers way back. We ran it very briefly. It did what we wanted. I just didn't have the courage to then implement the plan that I discussed. For some people, that you buy some in the 145 area, 133 area, and then I think 155, 130, 145, and 130s. And that worked out really well because it screamed up to 179.65. and then it had a round number 179 high the next day and then pulled back. The reason why I'm showing this together with Sienna, see the skinny news-related spike to the upside right here? I'll give you the date if you're looking at your own charts. This is the 19th of September, closes the day before at 149. Next thing you know, it's trading at a 174. Oops, I'm sorry, 166. That creates a rectangle, which I had put in a while back, but I took it out. And that rectangle was from the following day. So I did this, and I said in this rectangle, we could go a little above it, but we could also pull back. Now come again, and let's look at Sienna in the daily chart. Look, Sienna is CIEN, trading at 30.16, up 44 cents today. Look, it had that same skinny spike, and then it rallied for the second day to a higher high, and then it struggled at the 32.33 all-time high of the 31st of August, and then it created Chapman wave, lower lows, lower highs in a downward wedge formation. See, there's the wedge right there. There's a green. I actually, let me take this away. The green line shows you the Chapman wave falling axe formation. I want to relate as many patterns as I can. Look here, look at the 120-minute chart. Look at this whopper of a falling axe. I've never seen anything in a 120-minute chart this long. Yeah, we went under it for a moment, but look at I had this as a fan, Chapman wave fan, 1, 2, 3 trend lines, but it remained in the upper level. And it couldn't, even to this day, it hasn't broken to the upside. It hasn't broken, in this case, 25,000 will start to break to the upside. It's unbelievable, but it's just, and look at the lows. It just keeps testing exactly in the low. So now let's go back to our story, because chart patterns is where we are. Chart patterns are us. It hasn't broken out. So it's no good to just go to 31. It needs to start to trade. The moment it crosses above the 19th of October's high, 31.70, immediately you look to the left side and say, aha, 31.88 is next. And then you go to the all-time high of 32.33. That's why I'm saying it needs to close decisively above that. Now, you've got to respect stocks that are holding very well in this environment. That's the reason why when it was brought to my attention, it's one I looked at a while ago. It was way off my radar. And when it was mentioned to me, I thought, great. Let's look at this, because this is now a decent chart formation, and it just says if it takes out the low of 28, well, 29.30 was the low yesterday. If it closes under the uptrend line, let's call it 20. If it closes under 29, gets into the 28s, that MACD and stochastic, look how weak it is here. Look how much weaker it is than it was at the high. I'm going to be talking about how these chart formations tonight are so important if you analyze them in regard to the easiest thing. I'm going to say half close your eyes, just look at the pattern. What does it say? It says, wow, you know, I think it needs time. It's holding really well, and this is a stock. Or you could maybe nibble at it here as if to say, this is just a trial. This is just to keep my eye on it all the time. 5 shares. I don't know what you want, but keep your eye on it. But really, this is holding beautifully well enough to say in the next big move up, if it participates immediately, it's a winner. And if it doesn't participate, it says, you know what? It's in its time cycle and it's just delayed. That's the way I look at these things. So 28's absolutely important support. It's trading at 30, 2 points down, 2 points up. Think of it that way. All right, done that. A lot of questions came in. Let me see. Oh, 3D Systems comes out. Thank you, Dave. 3D Systems. This is one that I follow very closely. We had it as a study piece in one of my webinars. I gave it as a study piece that we owned. We had a spectacular move to the upside. It was way back earlier in the year. And now it's, in a way, I wouldn't say it's off my radar, but it hasn't been consistently on my radar. And right now it's tested the 200-period moving average. I'll be talking about it tonight. Let me just do that right now. DDD for my webinar. DDD 200 EMA. I hope I remember that because it's a good example. I have a couple. Testing it out right now. And here's something else I'm going to show. I know it's a little unfair because I'm the only one that has it, but I use it. I use it periodically. I'm using it way more than I used to. I used to treat it as, well, I've got all my other techniques. This is nice to have. But boy, I've found it's really amazing. Look, that 200-period moving average corresponds with all these support levels, 1536, 1579, 1542, and it's at 16.63. So when the earnings come out, if they are disappointing, that trend line at 1526 is going to become serious resistance because it was a peak F in the weekly chart. But wait a minute, what if it's just, it does well enough to have a decent 80 cents to $1.20 rally tomorrow, and it holds that rally into Friday? Well, then into Thursday. Then I'm going to say to you, keep this on your radar, like Sienna. This is one of those stocks you want to just keep focused on. At this point, it's not looking all that good, but let's see how it plays out. It is testing key support. Now I'm going to go to the question that I had. Oh, the dollar. I don't think I did the dollar. I kept it because I was talking about the chart formations. The dollar made a leg D in the root, and that is in the continuous contract. It is in the UUP, what we have from 2363, it's trading at 2578 from way back in April. This is a leg D extension. Now everything's in unison. I love that. But the UUP is fabulous because it's taken out decisively the 2567 V or U-shaped pattern, cup formation, and the MACD is not great, but it's good. The stochastics improved a lot. It's not great. It's at 77%. So my rule of thumb is, in this particular pattern, I want to see a decisive close. That's the weekly chart. 2 out of 3 weeks, it's got to close decisively above the 2567 left side high. Okay, so the dollar is at a very critical level. Not that it's not doing well, it's doing fabulously, but it's at a critical level because of resistance. And all it needs to do is to go to 97 in the continuous contract. And that means it's in leg B in the monthly chart. Fantastic green candles, 2 doji candles, not even barely were green over the last couple of months, and 1 red candle since the low that was made back in, was that February or March? That was in February. The low was 88.25. Oh, there it is, 88.25. It's now 96.84. That is 98.68. That's 12.14. Wow, look at that. You've got yourself, where did it go? 88. It's a 12-point rally. This is very, no, what am I talking about? Is that a 68 to 78? Well, what am I doing? 88 to 98. Wow, sorry, it's been a long day already. Yeah, and this is a very good move. And the MACD's cross positive, the stochastic cross positive. All right, we'll be back. Basil Chapman, Target Conditions Hour. A lot of questions flowing in. Let's just see Boeing as we go to the break. Boeing up 9. That's what's helping the Dow. I guess Dow's up 206. I'll be back. Oh, look at that nice candle. Horrible candle yesterday. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hello, so question I had here, yeah, the XRT, the retail is acting quite nicely. I see that Macy's is up. Whoa, it's even up more now. It's up $1.59. Very good. I like that. I think this is going to tell us that retail is coming back. If it can continue to rally through next week. You know, I'm going to do my very best tonight in the webinar to be as subjective as possible within the context of being as objective as possible. What I mean by that is I'm going to try to look at all the technicals as I do it, because today, we tried yesterday and that was not successful. Took small losses of very small positions, just as they were test cases for us. But I must tell you, I'm looking at so many aspects of this market where support is right there. We're at support. We're at very important support. And why would a Walmart today be rallying as if nothing had happened, having a low of 93 just a few weeks ago back in early October, and now it's trading at 101, leg A. Let me just do this up arrow because the MACD is strong and the stochastic is now at 85%. Yeah, wait, look at this. This is A. That's an inside bar with an A, so we don't have to type it in. And this is B. It looks to me like, and that's a D in the weekly chart. You know, that's the thing about this market. Through the rotation, you can see some sectors that are oblivious to what's happening in the other sectors, whether up or down. So this is very important. Walmart is saying, wait a minute, I don't care what's going on right now. This is a really good action. Steve Rose is saying they are running because they pay for Chinese. Yeah, right. The yuan. Wow, this is the evidence right there. I heard Steve talk about this some time ago. Absolutely good eye and good observation, Steve. So we're talking about, Walmart. Let's see if Home Depot is actually moving up. Oh, it's up a little bit. Yeah, so it's really very specific. Let's see Costco. I don't know what their relationship is with the Chinese, but Costco is up 4 at 226. Okay, it's a start. Yeah, things are happening. So that's what I'm going to try to do tonight in my webinar at 5 o'clock. Be as objective as possible and say, regardless of what's coming up, which we don't know, right? The midterms, we don't know. We don't know about China with the talks. We don't know about the G20 talks coming up. But we do know that there are certain aspects that are telling us one thing, and there are certain aspects that are telling us another. And those FANG stocks with their monthly charts are saying they're going to need time. They don't actually have to crash to go down, but then you might need time to consolidate. All right, let's go on. Questions. Oh, Boeing, I didn't finish. Boeing was up quite sharply, up 9. It was down huge yesterday. It went under the 200-period moving average. It's now over the 200-period moving average. It went under the the weekly dash trend line support. Now it's above that, not by much, but it's above it. I told you before, that monthly chart, I don't have a signal. I have clues, but no evidence. And that so far says, watch that monthly candle, because so far Boeing is still behaving pretty darn well. Next question was KRE. Oh, I haven't looked at KRE for a couple of days. KRE, more than a couple of days. KRE is the S&P Spider Regional Bank Index 200-period moving average. Let me make a note here. KRE. Am I going to be able to read this? 200 EMA. This is all for my show tonight. Good. Please, I looked at that because it hit that. It's trying to bounce off it in the weekly chart, but it really looks terrible. It's down 22 cents or 52.74. This is tough stuff. Let's look at the XLF. XLF was a little better the other day. Not that much better. It hasn't gone to its 200-period moving average in the weekly, but it broke way below it in the daily. Let's see Goldman Sachs. Goldman Sachs is at up $1.83. It's already struggling. Look at that. You know, the longer you test the 200-period moving average, the more it becomes like a sticky, like a magnet. And then you go below, and then it becomes sticky. Becomes you keep coming back to it. So 211 is going to be absolutely key for Goldman Sachs for the next 2-3 weeks, either as support or resistance. The question is, oh, XAL. XAL is the airlines. I'm getting to all the questions. Very good. XAL, oh, look at this. I drew this for the monthly chart. It's holding that support, very important. It's under the 200-period moving average, and it's got a green candle in the daily. It's had 3 out of 5 candles, beautiful green candles in the daily, but it means nothing because it's really a rectangle formation. Look at this. Rectangle coming up, one rectangle complete. So XAL, regardless of what oil's doing, with oil down like this, the XAL, so the airline index should be at 103 at least, not 96. So something's wrong with this picture. Look at the IYT. You're going to look at all these indexes in great detail tonight. Also, a little green candle here, quite a big green candle. Yeah, this is starting to act a little bit better. And that's what I'm saying. Tonight, I'm going to try to be as practical as possible so that tomorrow when we set up some positions for subscribers, we're starting the effort to say, regardless of the technical information, regardless of the fundamental information that's out there, which is all unknown, the technicals are saying X, and we want to deal with that. And that's, I hope I'm steady enough to do that tonight, because you can get a little emotional when markets do strange things. Just got to be as practical as possible. Bob, XLI, yep, XLI should be rallying. Oh, it doesn't look good. See, the XLI is telling me, look at that monthly chart. It is telling me way more than even the Dow or the S&P. It's saying that the industrial sector, which is really this is not the Dow, which is called the Dow Industrials. They're Dow Industrials with Verizon, with Visa, with Home Depot. No, these are not industrials. So, yep, Caterpillar, sure. So that's a big Cisco. I mean, give me a break. All right, the XLI is the industrials, and it's struggling. And then weekly says you could get a nice H pattern to 72.50. It's at 68 right now, sometime over the coming weeks, but you probably will have to come back and do some testing of the 68s again. All right, got that done. Well, I think I've got most of those. W is Wayfair. What was the question? DT wants to know. Wayfair. WTD. To date. Oh, no, you didn't mean that. No. W is something that I watch. Furniture, lighting, cookware, online. See, look at this. Here's Wayfair up at 106.57. Made a, is that a 52? No, it's about a 6-month low yesterday. And at 100, was that a round number? 100? 106. What am I looking at here? That looks like 100 to me. Oh, 99.84. And it's trading right now at 106. Hey, 7 points in a day, but yesterday it gave back about 14 points. This is really Overstock makes more money than Peak says in the den. Yeah, I could believe that, but this was a company that I know someone who's in the furniture business says it had impacted him for years very badly, at least for a year. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're back, and just before we wrap up, and you're going to go to Steve Rhodes, you're going to go to Dave White, and of course Tom O'Brien. I'll be back with Tom later on. Couple of things that I want to make note of in my webinar. This afternoon at 5 o'clock. There are a couple of things that we're going to be looking at, and it's using the tools. I will be discussing economic, socioeconomic, political, sociopolitical, geopolitical, fundamental, technical stuff. It's just part of what I'm doing. But most importantly, this is really what we want to cover. We want to cover the most essential aspect, that is the big picture. Where are we? And where are we going? What technical tools did I use for subscribers to pick the exact top in the Dow? We spoke about the top in the semiconductor index way back in March and how it was important to monitor it. We've spoken about other things. We're trying to put the whole picture in place. I'm going to be talking about, let me see if I can scroll down here and get there. Chapman wave methodology, just briefly, just to count the peaks. That's just part of the whole thing. It's not really, this is not the focus today. What is the focus is these patterns. how you can get an H pattern, and how you can use a U pattern. And I'll talk about those in relation to where we are. I mean, I love the visuals. You know, we have people here that do all sorts of things. Steve does a lot of work with, he extrapolates data and he uses the data in historical context. Dave White loves to do the mathematical, the formulae that works so well. You know, Tom O'Brien uses volume, unbalanced volume. I use. We've got different things. We've all got our specialties. But what's really important, you know, Larry Williams has his very precise Gartleys and butterflies. You've got Jason who does his work. So we all have something special. For me, I like the visual. I know a lot of people love visual. Look at that H. How important is the H? You want to know how important it is? Just have a look here. The H pattern. Look at these H patterns. Look at this H pattern right here. Look at this H pattern right here. And it keeps going down. Look what we did. We're making a large arch formation in W. You can use it all the time. And the cup formation, look at the dollar. Look at the dollar weekly. DXY, as we go out, look at this arch formation. That's the cup formation. I'll be back with Tom a little later on. I hope to see you at my webinar at 5. Have a great day. Stay tuned for Steve.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.